Good morning, everyone. This is Rashmi Shah from Simplicity. Uh, I'm doing this webinar from Dallas. Um, as every time, let me clarify that this webinar is only for people residing in India and Indian residents, and this is not for people residing in North America. So I'm going to talk today about the financial markets and stock market perspective from Indian investors' point of view. So let's begin. And thank you for joining on Saturday morning. It has been an eventful week, and every day something new is happening, correct? There are twists and turns in the world economy and the world. So what has happened? COVID-19 has changed the world permanently. So 2021, we are going to see a very different world, which is going to be driven by digitalization, global liquidity, and every country's macro is going to matter. Macro means that every country's balance sheet, and how they manage COVID situation, then geopolitics, and what are the trends. So the most important thing which is going to control everything for next 2 years is the trend in COVID management. That is going to be the most important thing, and the digitalization. So having said that, COVID-19 has brought forward the future by 10 years. So whatever changes was going to happen in next 10 years because of IT technology, AI, 5G, everything, that has moved 10 years ahead in just last 6 months. So that is, the world has changed permanently. And still, I expect the COVID to be there for next 2 years. So you will see major changes happening. The digitalization and awareness of climate change is going to be very good for the world, and it's going to dominate for next 2 years. So, and what has happened is, because of this change, the outlook in the financial market is very good. But since many people are getting affected by COVID and their small businesses and their careers, they are finding it very difficult and comprehend why the financial markets are going up. India is still very slow in compared to digitalization, what is happening in US and other parts of the world. But as India adapts more and more changes, you will see a massive improvement in the financial markets. So with that, that is my outlook on a whole. Now, let me summarize what happened in last 2 weeks. So my previous webinar was 2 weeks before, and in last 2 weeks, what has happened? So here I've updated the numbers of the market, correct? Now, as you see that currently from January 1st, Indian stock markets are still 6% down. Nasdaq is 26% up based on what was in January 1st, and it has rebounded 60%, almost 59% from March low. India has rebounded 50%, but still it's below 6% compared to January 1. S&P 500 is 3% up, but 50% up from lows. Dow Jones is minus 4%. It has not reached its 52-week high, which was there in February. And Nikkei is very close to 52-week high. And the rupee has depreciated by 3%. So India is still underperforming by 35% to Nasdaq. So Indian stock market has given minus 6% return. Nasdaq has given plus 29. So 29 plus 6 is 35. S&P 500 has given 6% return higher than Indian stock market. Dow Jones has given 6%, and Japan has given 7%. So basically, India is still underperforming, and I'm comparing here on every fortnightly basis how the trend is going on. So as of 4th of September, India was minus 37. Then on 18th September, India was minus 29. So in these 2 weeks, India outperformed the Dow. Nasdaq, but again it has fallen back in last 2 weeks. Last 2 weeks, Nasdaq has outperformed India, and that's the situation. Now, why India is underperforming the global market? The India is underperforming the global market because it's slow in reacting and adapting to the COVID-19 situation, as the cases in India are still spiking up. Of course, there's US, they spiked up in the month of June and they came down, but still the second wave has started again now in US, and US still leads the number one in the world as far as cases are concerned. But India has really, in last 2 months, the cases are going up. Just only last 1 week. So India is still yet to peak up in COVID-19 cases, and that's one of the reasons India is still underperforming. Excuse me. So that is the case. But in next 6 months, I see India catching up, and this gap of 35% which is there, it will narrow down. I expect that gap to narrow down. So Indian markets, I'm expecting to. Now, in last 2 days, there's a latest twist of year 2020. Donald Trump, the president of the world and the president of America, the strongest country in the world, got hold of COVID. And not only he got, a lot of other members of his cabinet and his inner circle also got impacted. And so this has taken in US totally a different twist because of the elections in next 1 month. Now, I'll just give you, now, many people ask me today, what are the impacts this is going to have in the stock market in the elections? According to me, it's a non-event. It's only a news media, 1 or 2 days, it will be hyped. But the world is like every other COVID case, this is going to be normal. And the betting market was predicting that Joe Biden, the Democratic candidate, was going to win the election. The odd of his election is going to be 61% before Donald Trump got COVID. After he got COVID, it went down. Joe Biden's chances of winning has gone up to 66%, and Trump has gone down because Trump didn't believe in wearing a mask, and now he has to wear the mask. So a lot of his the debate, presidential debate, which was very ugly last week, he made fun of Joe Biden, him wearing mask, and so everything fell flat on his face. Correct. So it has it has impacted his image, and my guess is, the way things stands today, he'll lose this election. But you never know what happens in 1 month. But irrespective of who wins in the US presidential election, I expect market to go up. Why? Because the US government, both the parties, Democratic and Republicans, are coming out with a package of minimum $1.5 trillion, which is almost 50% of India's GDP. They are going to spend in next 1 month, the next 145 days, as a relief to various industries in US, and they are going to pump in that much cash in addition to the cash they have pumped in. So moment that kind of cash comes in, the markets are going to rally more. So COVID is a non-issue now. So currently the major events is COVID and cases, and that people are getting used to live with that. And US elections and political and social conflicts other parts of the country, that is headline news, but that's also factored in the prices, and the markets are going up. US-China trade war. Now, what is going to happen if Donald Trump wins? There is going to be more news on this front. If Joe Biden wins, he is going to remove tariffs, and globalization will be back on its own track, which was there before. But he's going to increase the taxes in US. So it's going to be a wash. So whether Donald Trump wins or Joe Biden wins, it doesn't matter. The markets are going to go in positive way because Joe Biden is going to collect more taxes by income tax, and Donald Trump is going to collect more taxes by way of tariff taxes. But eventually both are taxes which the consumers have to pay and the companies will have to pay. So neither of them is going to impact the profitability of the company than what it is today. So the market has discounted that factor, and both of them are going to spend minimum $1.5 to $2 trillion in next 2 months on the US economy. So this is also a non-event. And India-China war and other disputes like Brexit, there's so much headline news everywhere in the world. But irrespective of all this news, the markets are going to march forward. They're going to go up in next 2-3 months. Now, the most difficult thing which people find is they are not able to adjust to the market, why the markets are going so fast, correct? And the change which is happening in the world today, people are finding difficult to adjust to that change. And so many people are in disbelief that market are not showing the reality. Now, market in this technological age, the markets have digested things very well. Now, I'll show you another chart. How big is the U.S. election risk? If you see the different precedents of U.S. for last 100 years, and every time the market has gone up, except for Bush time in 2008, it had gone down, correct? If you see this part here. Otherwise, markets have gone up under most of the precedents, and one should not worry about it. Election is a non-issue. So keep building your portfolio. Don't try to sell and go against the market. It's a non-event. It's a non-event. The other thing, this is a survey taken by McKinsey in the month of April, May of this year, that after COVID is managed, after 1 year or whenever it is, which economies are going to do very well. So if this is the optimism level, and this is an increase in the expenditure. So if you see, India comes on the top, correct? Optimistic level, India, China, Nigeria, Indonesia, Brazil, and Portugal. And US is here. So what I'm trying to say is there is a lot of money which is going to flow from the developed world to emerging economies like India. Money is also going to go flow to China, and this economies are, so Indian stock market is going to do well, and you will see, keep a watch on India's foreign currency reserves, which are at all-time high of $550 billion today. They will keep on rising. In the beginning of this year, India's foreign currency reserve was $450 billion. So in this year itself, our foreign currency reserves have almost gone up by $100 billion. So you will see, as more and more money comes to India by way of FDI, portfolio investments, the Indian markets will keep going up. Now, so today I'm going to talk about, so before I start off today's topic of consumption, let me show you one more slide, how Indian economy is recovering. This was the data which was published just in last 2-3 days. The GST collections for the first time in this year has exceeded last corresponding months of last year. Of course, this September, a lot of people had to pay the dues of May, June, and July. So understand that. But in spite of that, the collection is 95,480 crores against 91,000 crores last year. But otherwise, in most part of this year, the collection in the current year was less than last year. You see the gap here. You see the gap here. Now, some of this gap got paid here, correct? Because that was the extension. But still, now even if you see the petrol sales has almost hit last year's level, which is a very good sign. So the power demand has picked up. Manufacturing PMI has jumped up very sharply. It has gone to the highest level in last 4-5 years. So which is a good sign. So as Indian economy opens up, you will see things rebounding, and a lot of pent-up demand which people were holding in last 6 months is going to come. So I see good times ahead for Indian economy and Indian stock market for next, irrespective of the pain because of the COVID dislocation. There is going to be some pain because COVID is not gone away. People have to live with it and adjust to that. Now, today I'm going to talk about India's consumption sector. Why this is very important. This is one of the core of India's economy. Now, if you look at the world, what makes up the consumption sector? Okay, the consumption sector makes of consumer goods like fridge, TV, dishwasher, washing machine, FMCG products like coffee, soap, detergents, what we buy, automobiles, two-wheelers and four-wheelers, telecom, correct, mobile phone, we can't live without that, hotels, and expenditure on travel, and expenditure on media and entertainment. Now, because of the COVID, what I see is expenditure on foreign travel is drastically going to be cut down, but domestic tourism is going to do very well. You'll see by people of last 6 months they were controlling and they were staying at home, but eventually people will move out and they can't travel internationally, but they will try to travel domestically. So the domestic tourism is going to boom. As we know, media and entertainment, we can't go to theaters, but Netflix and everything is, Amazon Prime, Netflix, Hotstar, Disney, they're all doing very well. We are watching more television. So this demand, this consumption, this is the consumption sector, and this sector is going to do very well. Now, I'll explain you why it's going to do very well. And next, this is the most core sector of India. Now, which are the companies in this sector? So, Hindustan Lever, ITC, Airtel, Maruti Suzuki, Asian Paints, Mahindra and Mahindra, Nestle, Titan. And so these are the companies, correct? Most of these companies are debt-free, and except for Airtel, most of these companies are debt-free, and they have very good brands. And we spend a lot of money on buying the products from this company. We can't live without these companies, products of this. Now, currently, how they perform. Now, if you look at, this is a sectoral index which I am showing you. So let's focus on 1 year return. So in last 1 year return, the pharma sector did the best. Then Nifty IT. We know why pharma and IT, as I've already covered these two topics in my previous webinars. And we have made all our clients invest heavily in this pharma and IT. And they have given a fantastic returns. Then the mid cap, then the auto. And the consumption sector has given is a flat 1%. Now, but consumption sector didn't even fall much. But from bottom, it's gone up by 38%, and it's close to 52-week high. It's only 4%. So even pharma is away 6% from 52-week high. FMCG consumption, Indian consumption is only 4%. So you'll see it will breach. This sector will breach in next month or so the 52-week high, and it will rally. Now, if you take the example of US, correct? If you take the example of US. In US also, 1 year return, if you see, the information technology is given highest return. Consumer discretionary has given the second highest return, which is 28% return it has given. Now, if you take a 10-year basis, we all know US is a consumption economy, one of the largest consumption economy in the world. IT is 455%, but consumer discretion has given 355. So in US also, this sector is one of the most stable sectors of the US economy. And the same trend we'll see in India. Now, if you look at different countries in the world, how these countries are known as. So if you look at United States, people say they are leader in innovation, technology, correct? If you look at South Korea, they say they are leader in telecommunication services such as 5G, Samsung phone, correct? The moment you think of South Korea, you think of Samsung. The moment you think about United States, you think of Apple, Google, Microsoft, that kind of stuff. The moment you think of China, you think all manufacturing company. They manufacture everything, right? Right from clothes to shoes to caskets, everything, correct? Every consumption, every product which we consume, right up to Indian gods, idols, such statues also are made in China nowadays. So China is a leader in manufacturing, bulk manufacturing, and India is a leader in consumption. One of the largest market, they expect India to be a consumer market for next 30 years, 30, 40 years. I'll show you how that data pops up, correct? What the data tells up. So which are the largest consumer markets in the world today? If you look at the percentage. So Americans spend 68% of their GDP on consumption. So it's a $13 trillion economy. Second largest is the European economy, which spends 50%, $8 trillion on consumption. China is the third largest, but they spend only 40%. So if a Chinese guy earns $100, he'll spend only $40 on consumption. So which is much less compared to 68 in US. Japan is 56. $2.7 trillion, which is as big as Indian economy. And Indians spend 60% of the GDP, $1.7 trillion, correct? Now, today, India's economy is considered to be $3 trillion economy, 2.9 or something. But let's say 3 trillion. Now, as we are all aware, Modi is focusing to make India a $5 trillion economy. So if the additional $2 trillion are going to come in the India's GDP, 60% of that is going to be spent on consumption. So 60% of $2 trillion is $1 trillion. So if you add $1 trillion, this is the sector which is going to see the maximum growth. So now in this sector, what is the other thing, other changes are happening? Currently, there are a lot of small players and they are dying because of COVID situation and inefficiencies, and more corporates are taking over there. So you will see more and more these blue chip companies which are debt free. They are going to capture market share and they are going to grow for. So you will see a massive growth in this sector. So that's why I think this sector is poised for a big rally for next 2-3 years. Now, it's not going. Now, how you play that sector, I'm going to share that more in the later part of this presentation. Now, why India has an advantage in the consumption sector? As a rising income, there is going to, as our income level rises, we spend more better quality product, correct? So, when a person is earning 50,000, he doesn't per month, he doesn't buy a vacuum cleaner. But if the same family earns 3 lakh rupees a month, they'll buy a vacuum cleaner. So as the salary incomes and as the double income family, the income levels go up, the expenditure on more consumer durables, more items, they go up, correct? The expenditure goes up there. So that is happening. Then as you see in India, the rural sector, which is 40% of India's economy, the penetration of FMCG goods is still low. Now, as Modi has modernized, has opened the agriculture sector with the new policies, just laws which were passed in last 2 weeks, you will, and again the monsoon being very good this year, there is going to be a very good increase in income level of the farmers. So they are going to go again spend more on branded goods and consumption items. Then the other thing in India, the corporate retail sector is getting from unorganized sector to organized sector. So when it goes from unorganized sector to organized sector, FMCG companies and all consumer durable companies, they benefit more. And also a lot of FDI is coming from companies like Amazon, IKEA, Walmart, and they all are talking about $15 billion, correct? Now nobody talks about 1 million or 2 million, they are talking about billions, correct? So that kind of investment is coming. So you will see a major boost to all these branded companies in India. So the key trends in the 21st century, what we see is rising affluence, growing urbanization, family patterns. Families are becoming smaller and smaller. The younger generation, their spending patterns are different than their parents, correct? And there is a shift in the growth drivers. We are buying more online than physical. So all these things are making a very different level of the market, correct? And there are very few players in India's consumption economy, very few branded players, and they are going to benefit immensely. So we need to build a portfolio. Now I'll give you another unique thing about India. If you see this, the number of small retailers in India, number of small retailers in Indonesia, China, Philippines, Vietnam, Thailand, and Myanmar, that's Burma, correct? 65,89,000 number of small retailers are there in India. You know how many retailers are there in US? The US consumption market is almost 10 times bigger than India's market, but there are only 40,000. India has 65 lakhs. So number of grocery stores, they are less than 40,000. You see this? And what is going to happen? India is a lot of these small mom and pop shops. They are going to be, because of this COVID-19 situation, they are going to close down. uh, people will feel more uncomfortable buying from them. People will buy more from organized retailers. As like we saw how DMart is picking up, correct? DMart, which was non-existent 10 years back, how much market it has captured. Same way we'll see now Reliance Mart, we see Star Bazaar and all of them coming, and still they have not reached small towns. They are still in metros. Now imagine once this spreads across India and online shopping happens, how many of this are going to close down? And once they close down, the market is forever going into the organized market. And how many companies are there? There are hardly a handful of 30 to 40 big players are there. And these 30, 40 big players, they are going to benefit immensely. Their share prices are going to go give very good return. And that's why this sector is going to be a very good for investment and building up your portfolio. Now, the other thing which trends, this is of US I'm showing. So in 2017 to 2022, it was predicted that e-commerce is going to increase by 26%, whereas the physical stores, small grocery, mall and everywhere, the growth is going to be 7 to 8%, 6%, correct? Now, actual growth in e-commerce in the current year, after COVID came, has been 90% only in this year. So the projection was 26% and 90%. Same trend. So digitalization has gone 10 years ahead. So same trend we are going to see in India. Whereas the physical stores, the sales are down by 30%. So entire thing got upside down, correct? The business models got upside down because of the COVID. And so those companies who were very well in IT infrastructure of selling their products, they have benefited immensely. Today in America, you can buy cars online and the car company will deliver the car to your home. Yeah, you don't have to go to a car dealership, and you can buy a car anywhere in US. There's a company website called Carvana.com. You go to that website, their stock prices has hit the roof, and they sell also the used cars. You can buy, everything is online. Everything is online. You don't have to, and if you are not satisfied with the car, they take the car back within 7 days. So you can return the purchase also. So that is the kind of technology and changes are happening now. So you will see a lot of restructuring and consolidation happening in this segment. So as I said, same thing. There are some drawbacks of this, pain points in this. Like in India, that there is highway taxation, quality control issues are there, extremely price sensitive market. India is a very price sensitive market. Indian retail is still scattered by any global standards, by any standards. Even if 50% small retailers close down, still we'll have the largest number of retailers in the world. So relies heavily on external manufacturing. So there are still going to be some drawbacks, but irrespective of that, irrespective of these challenges, the top 40, 50 companies are going to do extremely well in India, like Hindustan Lever, Nestle, Dabur, Britannia, all those Asian Paints, they are going to do extremely well. So we need to build that portfolio. Now, this chart explains how consumer behavior changes with the income level. So when the income level goes up in this ratio, correct, rises in this proportion, what happens? The steady rise, what is about a flat rise, and where income doesn't, and where income rises and then falls apart, how the consumption pattern changes. So it's a very interesting slide. As the income level in India, most of the families are covered in this. Senior citizens mostly come in this category, correct? And most of the middle class families will be in this category. So in this first two categories, where this proportional income increase is going to be there, the expenditure on microwave, air conditioning, refrigerators, TV sets, mobile phones, correct, internet, eating out, all this going to go up drastically. It's going to go drastically, and we need to take a benefit of this growth in this sector by building a very forward-focused portfolio. The other challenge which I see in India, Indian investors, is the stocks in this sector. They are not speculative stocks like Nestle, Hindustan Lever. They are not speculative stocks. So investors, they find them expensive and they move very slowly, but they always move in one direction steadily. Investors prefer volatile stocks, which move up and down every day, and they burn their fingers there and they miss. Today, the investments in consumption sector is by very few investors in India. Most of the investors have invested. You will see Yes Bank has more number of shareholders, at least 30, 40 times more than Nestle. Isn't it weird? Reliance Capital will have 100 times more shareholders than in companies like Hindustan Lever and Nestle. And why? Because those companies are very speculative, but people have burned their fingers, but they still go by tips and technical analysis, and they get killed there. In this sector, the steady movement happens, and you have to build the portfolio over a period of time by investing, following a process. But this is even better than fixed deposits. I have hardly seen anyone losing money, anyone in my career of last 40 years, if they have invested in this sector. Have you heard anyone losing their shirts by investing in Hindustan Lever, Nestle, Dabur, this kind of portfolios? No. But you have in banking stock, even banks like State Bank, people have lost a lot of money, but you have never seen that happening in Hindustan Lever, State Bank, correct? So we need to build, but these portfolios, they don't move, they are not very volatile, so not much news comes on the TV. People like to talk about all these volatile stocks. Then the other aspects of consumption story in India is, as you see currently, this is the India's demographic by income, correct, in the strategy. So as this higher income category percentage increases, the consumption will increases, correct? Consumption increases. Then also, as the number of people move more from rural to urban, the consumption story even. This is our traditional families, correct? And nuclear families, and these are traditional families. So if you see the nuclear families percentage is increasing and traditional families are dropping, consumption goes up. So there are multiple factors which are playing in the Indian society and which is going to drive the consumption economy to a different level. So everyone needs to make this part of their core portfolio over a period of next 3 to 4 years and 5 years. It won't disappoint you. But you should not play this market, try to time the market, or buy today and I'll sell next week. No, this is not the place to do that. This is a place where you invest. You invest and build the portfolio. Now, Indian income distribution in affluent rises, correct? So as how the pattern changes, correct? So currently we have more people in the lower cadre and less people in the higher, but you see how this is going to change, correct? This is becoming smaller, low income category, and high income category is becoming bigger and bigger. So as the income level rises, our quality of life improves. We spend more money on our quality of life, and that quality of life is going to improve drastically in India over a period of next 15-20 years, and you will see a massive growth for income stock prices of these blue chip companies. Most of these companies in consumption sectors are blue chip companies. I wouldn't recommend investing in small speculative companies, correct? These are blue chip companies. You build a portfolio, it's as good as gold. Now, Canada's pension fund, which is one of the US pension funds, are the largest in the world, but Canada is also big, and they have identified India as one of the best emerging markets to invest by 2025, and they have given a very high allocation to India, and of course when they give high allocation to India, they also give 60% of their portfolio investments in India go to consumption sector. So they look at the Indian economy and where the Indian economy is going to grow. So this sector, as I said, is going to attract. You must be reading in the news how much money Reliance has attracted in last couple of months, correct? And why they have attracted? They have attracted that money in Reliance Retail. Reliance Retail is their main theme. So that is again a consumption sector. But now Reliance Retail is a retailer. Now he's going to buy, that retailer is going to buy products from whom? Hindustan Lever, Nestle, Dabur, correct? They are going to, so eventually when we are saying retail, so he's a channel, but the channel is going to buy the branded products. So the consumption sector has very good future outlook. So how do you build your portfolio? You build a portfolio, identify a theme, and build a process and follow the process. Follow the quality, correct, and build the portfolio step by step, and increase. Don't shuffle your portfolio, and over a period of time, you will see a very good return in this. Now, this is not going to be a volatile sector like you see the banking stocks. Banking stocks in India are volatile. This is not going to be a volatile. This is going to be a steady growth, correct? Steady growth, and you won't get disappointed. Now, with this, I end my today's webinar. Feel free to ask questions, and let me open the session. Yeah, give me a yeah, and I'll try to like you see the. Okay, sorry about that. Yeah, let me open the question. Yeah, the first question is. Indian economy is doing very bad. Okay. So one of the questions asked by that is the Nobel Prize winner, Mr. Banerjee, said the Indian economy is doing very badly. How much do you agree with this? Okay, so there's all kind of experts who come on TV, correct, and they speak. Now we have a respect for them. Now when they are giving the talk, they are saying yes, Indian economy is doing badly compared to if you see last 4-5 years, because a lot of restructuring has happened. The cyclical part of the Indian economy did very bad. The banking sector is doing bad, correct? The construction, real estate. So and that has affected the overall economy. But the FMCG sector has grown even during this time. So if you see the stock price of Nestle today and 5 years back, it has tripled, correct? It has tripled. So now, so this economy is also right, and what we are saying, we are talking now. If you look at long-term perspective, Indian economy should do very well. Historical perspective, last 4-5 years, yes, Indian economy has not performed the way it was expected to perform because of multiple reasons, correct? So let me put it this way. So when you try to change your habits, any person who tries to change his habits, he'll be in discomfort for a few days, correct? So Indian economy is trying to change its way of doing business in the last 4-5 years. Demonetization happened, then GST came, and then this world COVID thing came. So yes, so there was some discomfort in the Indian economy, and it has hit that. But not every part of the economy has got hit, but it's now going forward, I see a bright future, correct? Everything is relative. Then the next question is, petrol sales have come back to normal, but the number of vehicles on the road have come down. What is the rationale behind that? Okay, the petrol sales may have jumped up because last 4-5 months nobody was using vehicles, and it may not have petrol, and suddenly everyone came to fill up the petrol, correct? So it may have shown a one-time boost in last month. Now we need to keep a watch on what happens this month, and the number of vehicles may be cities may be less, but the number of vehicles which were plying on the rural India and the highways which were supplying goods to all of us, the consumption must be more there. So yes, so that may be the reason. Yeah, true. And the diesel sales have not gone high. It's the petrol sales only which has gone high, and maybe because this was one-time adjustment which was there. We'll see that. How will the consumption sector perform if the unemployment rises due to rapid digitalization and automation. Good question. Okay, the structure of employment is going to change. I agree with that. There is going to be some pain, but new kinds of jobs are going to come. Yes, but there is going to be some pain of unemployment for at least in the short term. But uh, the other part of the economy, we can't apply generalization, correct? So even if you see in US economy, the unemployment is the highest level after the World War II or Great Depression. It's even higher than Great Depression time, the unemployment today. But the stock markets are doing extremely well. The consumption economy is also picking up here too, correct? Because the liquidity which was in 1930 and what is there today is a different level. In India also, the liquidity which was there in 1970s and 80s and what it is today, it's at a different level. The money supply is very high. People have a lot of savings. See, our generation has a lot of money compared to our grandfather's generation. So what happened in grandfather's generation when unemployment happened and today happened? So, and there is a family support. So in US there is a government support. In India there is a family support. In US there is a government support. Government pumps the money here. So I don't think the situation is that bad. People will adjust and people will adapt. Also in certain sectors labors are not available. Now there will be more demand for people having real skills. Administrative and white collar jobs which were there sitting in office, they will be less. But if you, like in US, if you're a plumber and a chartered accountant earn the same amount of money in US. Can you believe that? A plumber and a chartered accountant, they earn the same amount of money because the skill set, the chartered accountant sits in office in the overhead, correct, and a plumber has real skills and he is really producing, fixing up the pipes and building homes, and is in high skill demand today. So that kind of job pattern is going to change. Administrative and office overheads, salaries are going to come down. So there is a structural changes happening everywhere. That is, yeah, but I'm optimistic that even IT jobs are going to be there more. There are going to be a lot of IT jobs. More outsourcing is going to come to India. More high-tech manufacturing is going to come to India. Like today, India doesn't have single. There are certain industries like chips, microchips manufacturing, computer parts. They don't exist in India. Mobile phones, they didn't exist in India 5 years back or 3 years back. All those high-tech industries are going to come. So that's going to generate employment. So there is going to be a change in the pattern, correct? Organized thing is going to be there. The next question, I take to the next question. How will the consumption sector, how banks will fare in this theme which you explain, how banks will do in $5 trillion economy. Yeah, so banks are going through extremely painful time just now, but without banking, nothing works. Banking is like a nervous system, correct? A blood supply goes through arteries. Now, same thing, the blood supply of the economy is banking system. So banking system is going to adapt and adjust, and in every recession, the worst financial banks get the worst affected. Like you saw in 2008, same thing happened in this year also. In US also, the banking sector is doing very bad just now here, but they will bounce back. And banking has become more like a cyclical product now than it's more like a commodity, correct? So again, in banking sector, there will be a very different sectors like financial services, asset management companies like mutual fund companies, insurance companies. They will outperform the banking stocks. Again, within banking stocks, there are private sector and the public sector. Now, both have their advantages and disadvantages. Public sectors are very slow to react, and a lot of political interference is there. Private sector banks, they can take their decisions very quickly, and they can adopt new technologies, so they should bounce back much faster than public sector banks. So there's a lot of all those kind of stuff is there, but banking sector also will bounce back. It should, yeah, banking sector, without banking sector, and the economy can't do well. You'll see that. Mm, yeah. Then next question is how asset management companies will do as more people will go to digital assets or investments. Yeah, shift from real estate market. Yes, the asset management companies will do extremely well, because as fixed deposits, bank deposits. See, let me put it differently. Correct. So when you invest money, uh, you want your money to be invested in the best companies or best businesses of the world. So today, which are the best businesses in India? Hindustan Lever, correct? Nestle, Reliance, HDFC Bank. Now, you don't. If you buy those stocks, you are investing in the best businesses. But you, because these stock prices fluctuate, many people think, no, 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 I'll keep in a fixed deposit. I don't want to look at this, my returns. I want steady returns. So they pick in a fixed deposit. So when you put the money in fixed deposit, where the money goes, does that money go from, money has to go somewhere to get a return. Does that money go to Hindustan Lever from bank deposit? No. Because Hindustan Lever doesn't borrow. Does that money go to Nestle? No, it doesn't go to Nestle. Nestle doesn't borrow. So the money goes, your fixed deposit money goes to second category of companies, correct, who borrows the money. So they are taking more risk. So banks are taking more risk to give you a steady return. So and that's why many cooperative banks, they went and finance builders, they went and financed so many risky assets, and they went bankrupt. And a lot of Indian pensioners and especially senior citizens went to those banks to get 1% or 2% higher return, assuming that the government will bail them out, assuming that banks are safe. Nothing is safe. Money has to be deployed in the best businesses. So asset management companies are one of the best tools, because when you invest money with asset management companies, they have to deploy money in the best asset class. So money will flow from banks to asset management companies more. Also, the profitability of asset management company is guaranteed, because they don't take the risk. Bank takes the risk of guaranteeing a return. Asset management company don't take guaranteeing the return. They take the management fee. Now, if you take a 7% bank deposit, the bank loans at 9%. So their spread is 2%. 1% is office overheads. So only 1%. So if out of 100 loans, one loans go bad, the entire margin goes. Now, if you go give the money to an asset management company, they also charge you 2% for managing that, but they don't give you guarantee. If the asset doesn't work, the loss is transferred to the investor. So asset management company valuation will always be higher than banks. So asset management companies will do much better than the banking stocks. How commercial vehicles would perform, as they would be the key to consumption story of India. Yes, commercial vehicles will perform very good, because in India, all those old commercial vehicles have to be replaced, correct, because they are very inefficient. If you see the trucks in US and you see the trucks flying on India, you see the quality difference, correct? So yeah, they should be doing well. You'll see upcycle in that, and with fuel emission norms changing and everything, yeah, they should do well. Tata Motors and Ashok Leyland should do well. Which companies would play best role for home automation in India? Yeah, this is a good question. Home automation, the number one company in home automation in the world is Honeywell, which is there in India too. Then there are other companies, small, which is the other company? I forgot the name. Yeah, there are quite a few other companies, but Honeywell comes up the prominent, correct? Honeywell stock is around, it's a very good stock. It should be there in any consumption portfolio, mutual fund portfolio. Then how is the agriculture sector going to do? Yeah, agriculture sector is also, we'll see an uptick after this agitation for the new reforms and everything stop. Uh, yeah, India is still a 40% agricultural economy, correct? Employment-wise, and contribution to GDP is 20%. So you'll see a lot of efficiency there coming up, and at least for the coming year, agriculture sector is supposed to do very well. With this, I end my today's presentation. If I've missed any questions, uh, please connect with Jaideep, Sanket, or anyone in my office, and uh, if you and we'll get back to you. Thank you very much. I appreciate if you can subscribe to our channel if you have not done so far. And thank you very much. Thanks. Have a nice day.